Hello and welcome to the program. Let's get straight into the key signals from overnight trading. U.S. stocks finished essentially flat, with the Nasdaq closing at 26729, the S&P 500 at 7785, and the Dow at 53732, all basically unchanged from the previous session. However, futures turned slightly weaker in pre-market trading, with Nasdaq futures down 0.13%, S&P futures down 0.13%, and Dow futures down 0.32%. That suggests sentiment is cooling a bit before today's open. In individual names, Nvidia edged up 0.2% to $225.16, Tesla rose 0.18% to $342.27, and the ARK Innovation ETF gained 0.25%. But the Bitcoin-linked products, IBIT and MSTR, slipped slightly, showing some divergence between AI and crypto-related assets. One quick note, we saw some eye-catching gainers on the radar, like NBIS up over 50% in 5 days, AXTI up 78% on the month, and AEHR up 65%. But those are still flagged as unverified, so we are not treating them as today's main themes. Now let's look at the global macro picture. The 10-year Treasury yield is at 4.71%, up 0.3% on the day, and it has broken above the 4.7% level, which is a tight signal. This level is important. If yields continue to push higher to 4.75% or above, that will put noticeable pressure on global equity valuations. The VIX is at 15.07, up 5.75% on the day. It is still within the normal 15 to 25 range, but the marginal move is cautious, and short-term volatility is starting to pick up. We need to watch whether this triggers a trend reversal. The dollar index, DXY, is at 99.43, still in a weak range below 100 for several consecutive days. That supports emerging market asset prices, but it also reflects that the market has already priced in a fairly full path of Fed rate cuts. Oil prices are moving higher, with WTI at $82.81 and Brent at $89.11, both up over 1%. This points to ongoing supply concerns and sticky inflation risks. Spot gold is at $4,440, down slightly, but the high-level consolidation pattern remains intact. Overall, the market tone is moderately risk-on, supported by a weak dollar and stable U.S. equities, but rising Treasury yields and a higher VIX are two offsetting forces. Here is the key condition to watch: if the 10-year yield breaks above 4.75% or the VIX climbs above 18, we should turn cautious. Let's move on to the external environment for Chinese assets. The onshore dollar-yuan rate is at 6.7284, and the offshore rate is at 6.7403. The onshore rate remains in a relatively strong position around 6.73. With a weaker dollar and stabilizing domestic economic expectations, the yuan faces little depreciation pressure and even has mild appreciation momentum. That is a positive for foreign capital flows into A shares. On the policy front, there are no verified new developments regarding China-US tariffs, trade, or technology restrictions today. Based on current external data and exchange rates, we estimate that A shares will likely open flat to slightly higher. Yesterday's strong rally may bring a modest gap up, but rising Treasury yields and weak U.S. futures will likely cap the upside. The invalidation conditions to watch are the offshore yuan falling below 6.75, or northbound capital net selling exceeding 3 billion yuan in the first half hour of trading. Now for today's A-share market outlook. First, the index direction. Yesterday, A-shares posted significant gains. The Shanghai Composite rose 1.41% to close at 3,982 points, the Chinex jumped 3.14% to 3,740 points, the Shenzhen Component Index gained 2.44%, and the CSI 300 rose 1.61%, with good volume price coordination. Today, we expect a volatile but firm tone. If the Shanghai Index holds above the 3950 support level, the firm pattern will continue. If it breaks below 3,950 quickly and northbound capital turns to net selling, we need to be wary of a fade after the morning spike. Second, the main sector themes. We continue to favor the AI computing power and optical module direction, as well as the power equipment and grid direction. There are 3 reasons. 1. Yesterday's Chinex surge was clearly driven by tech heavyweights, showing that risk appetite for growth styles remains intact. 2. A weak dollar environment favors international capital allocation into tech stocks. 3. These 2 directions have consistently appeared on the hot sector list for several days, indicating sustained capital positioning. Third, on risk, today we should avoid high-valuation pure theme stocks, especially AI concept names that have rallied sharply but lack earnings validation. The reason is simple: the VIX rose 5.75% in a single day, meaning global risk appetite is marginally contracting, and high-level theme stocks have significant downside elasticity. Fourth, on northbound capital, with a firmer yuan and strong A-share sentiment, the probability of net inflows today is greater than net outflows. The signal to watch is whether northbound buying exceeds 2 billion yuan on a sustained basis after the open. Now for the stock radar. Today's opportunity candidate is AAOA, with a direction of volatile firmness, a probability of 55%, and a time window of 1 to 3 trading days. The trigger condition is continued fermentation of AI data center optical module demand. The stock is up 15.53% in 2 days and 13.15% in 5 days. If it breaks above the current high, short-term momentum will extend, but today we should mainly observe and not chase. If it falls below today's low, the thesis is invalidated. For existing positions, 5802.T has a catch-up progress of only 11.1%, but the fundamental logic is intact, and it is relatively resilient, with a probability of 58%. Continue to hold, with a failure condition of breaking below the 200-day moving average. COHR has a catch-up progress of 60.9%, relatively strong, continue to hold, also with the 200-day moving average as the failure trigger. POET has reached 100% catch-up progress with a monthly gain of 29.63%, and we recommend taking profits in stages. If it breaks below recent support on volume, confirm the profit-taking execution. AEHR is also at 100% catch-up progress with a monthly gain of 65.4%, and we suggest taking profits in batches and reassessing after a pullback. The risk avoidance name is HPS.A, down 13.56% on the month, with 0 catch-up progress and no improvement in downstream baseline. The probability of further downside is higher, around 65%, and we recommend exiting. AXTI, up 78.02% on the month with excessive valuation, also suggests profit-taking and avoidance. Here is today's one-sentence core judgment. A weak dollar combined with A-shares breaking out on volume suggests a higher probability of firm range-bound trading today, but rising treasury yields will cap the rebound. In terms of operation, focus more on individual stocks and less on the index. Today's probability assessment is 40% for an up day, 40% for a range-bound day, and 20% for a down day. That is all for today's program. Thank you for watching, and we will see you next time.